Greetings, everybody. This is Jeff Scott, and this is my top-down review for April 26th, 2020, and I titled it Earnings Lollapalooza. There are a lot of earnings this week and a lot of earnings on stocks that are probably in your portfolios. As always, this is for educational purposes only. Any recommendations are in the spirit of education and should not be considered investment advice. I am a doctor, not a broker. Most physicians lose money with their investments. I am not affiliated with any software vendors or companies. Anything I present to you, I have paid for. Any purchasing opportunities I put in front of you are with a third party and at prices that are discounted because I take no affiliate fee. And I paid for everything I use, and trading involves risk, and you alone are solely responsible. From time to time, I'll talk about option trades that I might take, and just to call out, you should know what you're doing with options, because on the positive side, I know no better way to make money quickly, and B, I know no faster way to lose all your money. So you need to know how to use options to benefit from them. I always like to put some comments about where I learned from. I started with CanSlim, improved by Morales and Catcher, and Ian Woodward. George Lee, may rest in peace, a great trader from the Pacific Northwest. Van Tharp, the king of position size and money management. Sagar, with superior profit. The more I use his tools, the more I realize how genius they are. And then John Person, who I'll be doing a webinar with on Wednesday. Look for invites to that. I may include the link below the show me on this video, whatever it's called, underneath the picture. John will talk about what he does, and I'll talk probably a little bit about HGSI and how I've incorporated his stuff into my work in HGSI. While you're at it, when you're in YouTube, remember there's a gear in the lower right-hand corner. It should, after the thing is fully loaded on my end, give you the ability to change the resolution. I record this in 4K. In addition, please hit the thumbs up if you like this, and subscribe, because I have no mailing list. I just post on YouTube. The website for HGSI is highgrowstock.com. If you're interested in John Person's add-on, you have to go to personsplanet.com/HGSI. A couple weeks ago, I brought my new friend, Dr. K. Like everything, I start as a customer, I buy their stuff, and then I start talking to them. Keith Wade, he came on, he presented his tools. I'll show you some of his tools today. He gave a number of specials. These are not inexpensive. I use the seasonality package, Laguerre RSI, and the stochastics, and the season watch list scan. I use them every day. I find them to be very valuable. I'll show you some of the things I do with them today. Stock patterns are cyclical. The first question I ask you is, where are we? Well, the last couple of weeks have been pretty strong. It certainly feels like, at least short term, are done going down and we're moving back up. The question is, will this continue to new highs, or will this be like almost every other bear market of the last century and this century, that we will have some type of a retest, double bottom, etc. More to follow. My approach changes quickly as my position on this curve changes. I am more long than I was a week ago, but I did pick up puts on my major positions having earnings this week, because this is going to be an interesting week, and we'll talk more about the earnings Lollapalooza shortly. Friday ended up the week strong. The week started off fairly miserable Monday and Tuesday if you were long. On Wednesday, it looked like we were going to be good, and then late in the day, some words came out, perhaps wrong, that Gilead's trial may not be all that it's up to be. It was a Chinese trial. The market sold off because I think they're banking on some type of a treatment for coronavirus so that people get back to work and we can restart the worldwide economies. And then it recovered some on Thursday and then again on Friday. So strength to end the week. Major markets tell the story. Let's go and look at it in Thinkorswim very quickly. This one. This will be the E-mini futures. The reason why I like the futures is it captures what happens before and after hours. And there have been days where there's been major moves after hours that by the time the market opened didn't look like much because the market came back. What do I see here? I mean, frankly, I hadn't even looked at it this way before, but you could almost argue that is there some type, whoa, I don't want to do that. Is there some type of a wedge forming there? Certainly we've gone sideways, and isn't it wonderful when the market movement is not totally crazy as it was on this move down here? I mean, this was a crazy market move, in my opinion. That was hard to deal with. You had roaring improvements, retracements and downtrends, and now we've got a series of higher highs and higher lows. Are we in a new uptrend, or are we in one of these things called a rising wedge, which occur in bear markets? We're going to talk about that because I think that's a critical question. But if I take off all these drawings really quickly, remove drawings. All right, this was a sideways week, and really 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. For the last 11 days, we've pretty much been in a trading range here. So sideways down the E-minis, but finishes at the high of the days. If I had to be bullish or bearish here, this is the 50-day moving average. I'm bullish. If we look at the next, at least until 9/31. If I look at the NASDAQ futures, looks the same way, kind of a sideways move here. Again, are we in some kind of a bearish wedge here, or have we broken out and are we going to new highs? More to discuss as we go further. The Dow futures, the difference between the Dow futures and the E-mini NASDAQ, here's the 50-day and the 200. If I go to the Dow futures, here's the 200 and the 50. It's still below, so clearly weaker. And then the one that's been the weakest further down in the pattern is the Russell. But on the week, Russell had a very good week and the strongest week among the major markets. The VIX continues to come down, but notice it's still elevated. That's sort of curious to me. It did break down below the 50, and maybe the VIX will fall further this week. The US dollar, it still seems to be range bound, or is it in a wedge itself? Regardless, it seems to be going sideways, although it was down on Friday. If we look at the weeklies, the big thing you could see is that the element of the uptrend, and notice that right before the market rolled over on the E-minis, the NASDAQ futures, the Dow futures, we had essentially all-time highs. You'd have to go back into 2018 to see the all-time highs on the Russell. This one is different than the others. Now, underneath, this bothers me. Rates continue to fall, probably related to unemployment and concerns about the economy. But notice in 2009, let me get my glasses on so I can actually show you the right place. We did not see interest rates drop to the level that we see here. So this is pretty significant, and I'd have to put that in the bothersome category. Now, the AD lines are fairly flat this week. The Russell actually index turned up a little bit. You can look at the NYSE and see not a big drop this week versus last. The Russell is in kind of the orange, and you can see it nubbed up. The other thing that's pushing higher are the TLT bonds. Breadth. Stocks above the 200 did not change much this week. Stocks above the 40 went up a little bit, as did stocks above the number of stocks showing a 3-month new high, new low. None of this gives me any signals. It's all in the middle area, not to extremes. Now, I look at the McClellan. I don't usually say something about it because I'm really only looking for 3 signals, as I learned from my buddy John Person. I'm looking for extreme readings on the oscillator or the summation index. Here was an extreme index reading here. Typically, these might be associated with some type of a market reversal, as we saw back here on the oscillator, here on the summation index. I look for divergences, as we saw earlier in the year, and we commented about how this can't be good when we got higher highs, and we're not seeing that on the oscillator and the index. And then lastly, I look for a zero reject, which we did have here a couple of days ago. Same thing on the weekly, no signals this week. If I go into Edge Rater, and thank you to Chris for adding a tool that makes it easy to look at the impact percent demand and supply. I'm still doing some manipulation on it. I think it should matter, but when I look at it in a lot of time frames, it does not seem to correlate. I think we still got some work to do because I do believe I'm going to find a story there. The buckets show me that in the S&P 1500, nearly 3/4 are above the midline. That's bullish, but not to the point where we've been above 90. These are the deciles. These are the stocks below the bands. These are the stocks above. No signal, upward trending market, bullish, but nothing excessive. There should be no Hindenburg omens here, and there are not. And notice if you look at the number of new highs and new lows on the NYC on the left, the NASDAQ on the right, there's not a bunch of new highs and new lows here. And you're not at a new high in the market, so you won't see a Hindenburg. I've been using the Woody indicator, which would be the third or fourth column, however you're counting here. These are the different indexes, and green is bullish. I've been using this for years. It has been extremely bullish since the market turned. What I'm not used to seeing that won't go away is this extreme volatility. And I think that, as I say above, it's bullish, but boy, there's lots of volatility. And even on the sectors. Now, when it comes to sectors, to be honest, I'm doing more of my work now using a tool from Sagar. And this tool is called Q Edge. And if I look at the sectors and I look at 5-day performance, 0 is the current day. Since the current day was Friday, it might as well be 1 day. You could see that over 5 days, only 3 sectors were up. Yet on the last 2 days, it was a much stronger market, kind of consistent with my comments earlier. If you look at in, I guess, magenta or pink, you could see that everything was up on Friday. When you look at the maroon brown, you could see energy over the 5 days led. If you start looking here, brown is 5 days, green is 10 days, and blue is a month. You could see with the market recovery over a month, all the sectors have been positive, led by energy, healthcare, and you could see the rest. It's been a strong market, interestingly, despite everything. If I go to sector and let's look at 5-day performance. Let's just go to sector percent. To give you an idea of the strength of this market, you could see that this week, the energy, if you look at 5 days from the sectors, and let me update, this is not updated, hold on a second. Here we go. I say they weren't all good for 5 days. You could see energy over the last 5 days was up 13%. In real estate, utilities, financials were the big laggards. So sectors, at least the last couple weeks, have strengthened, also volatile. I like to look at the Canaries. The Canaries are an extended version of FANG, and maybe I should look at just FANG, but I've added things like Tesla, bookings, Baidu, to the Facebook, Apple, Netflix, and Google. And boy, oh boy, have we had a big run off the bottom. This was the 2019 close. We are clearly up significantly on the year. And the question is, since many of these have earnings this week, Netflix are out already, will we break to new highs? I think there's a good chance. Know your news and earnings dates. There are so many earnings, I put them on the next schedule. There's some big news this week. We've got a Fed meeting. I mean, it seems so anticlimactic. I would expect that they'll come out and say that they will continue to do whatever it takes. I'm not sure they're going to do anything incremental at this meeting. We have some jobless claims on Thursday, and they have been amazingly high. But every day they come out, they're horrible, and the markets go up. So we'll see. Now, in regards to earnings, it is a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. This is why I call this week Earning Lollapalooza. These are earnings come out. This is from Earnings Whispers. To get this, you don't have to subscribe to Earnings Whispers. Just go to Twitter. I'm not a tweeter, but I do have a username, and type in and search Earnings Whispers, and this will show up every day. They'll give you a version of it and give some commentary about expected earnings. We'll come back to this. I mentioned Dr. Keith's tools. Let me show you something from Dr. Keith. So let's look at earnings A through L, and then I've got M through Z. Now, I'm going to go to this thing, Dr. K Signal New, and what I know about this indicator is, and I mix up the 8s and the 10s, it looks back and sees, first of all, you have to have, and again, I can't remember sometimes whether it's 8 or 10 years. You need to have a fairly significant amount of years of stock data. And then it looks forward 20, 40, and 60 days. If you get above, I believe, 8% during that period of time frame, that will trigger a signal. If the signal is a red one, that means you've got a negative seasonality coming up. If it's green, you have positive seasonality. So I like to look every week at those stocks having earnings. And does anything look interesting? And we'll come back to Dexicom, which is here. But the earnings, at least at 40-day earnings, are very strong on CEMI. CEMI. So I'm going to write that down so I remember that we want to take a look at that one. Anything else look interesting here? I know we'll look at Dexcom. That's got strong earnings as well. Let me just flip to the second half of the alphabet. There are so many I had to make it into 2 or else I overloaded the system. I don't know what to do with Vanda. It's been in that price forever. Yes, I see some big moves in the past, but it's biotech. I don't know if it behaves like others, but here's a couple that look interesting. Meritor, MTOR. And then the other one here is Pegasystems. And I'm looking at their 40-day and 60-day earnings, showing a big move coming up, PEGA. All right, so hopefully I won't forget, and we'll actually look at those before I'm done today. Close these up for now. All right. So we'll come back to this and look at some of the charts before we're done today. The other title for today is Can Coordinated Worldwide QE Overcome Historical Comparisons? If you listen to people like Morales and Kocher over the last 8-9 years, they've talked about how QE has sort of defined the market. And, you know, if you always think the market should go down, it doesn't go down, it's probably related to QE. So I put this up a couple weeks ago. It's from Nautilus Research. Obviously, we've come up even more from the 10% return as of March 25th. We're up over 20% off the bottom, 25%. And what I asked back then was, is this going to be different than 29 and 87? And I pointed out that both had significant bear market rallies in this range and both pulled back. Here is a picture of the Dow Jones from Factoro on TradingView, posted yesterday, looking at the Dow Jones in the 1929-1930 period, which is this middle period there. That's the S&P. Here's the Dow. And notice I've talked about some falling wedges. It showed a falling wedge on the Dow after a significant rally. You can see what falling wedges do in a bear market. Rising wedges. If I've been saying falling all day, shame on me. It's a rising, not a falling wedge. So a rising wedge in a bear market. I should go back and redo this whole thing. But again, if I called it falling, I was mistaken. It's rising wedge in a bear market. So rising wedge, bear market, breakdown, new lows. Here we are today. Is this going to be 1929 and 30 all over with a significant retest? Or are we different this time? And how many times over the last 20 years have you said to yourself, whenever you start saying or asking, is it different this time, you know it's not. So we have to be aware. And this goes to my favorite neighbor, ex-New Jersey Nets cheerleader, so she knows who she is, that this market is still at risk. And yes, I have FOMO too. Now, if you want to go with the story of it's different this time, here's the chart. Central banks in the group of 7 purchased 1.4 trillion of financial assets in March, nearly 5 times as much as the previously monthly record set in April of 2009. What happened in April of 2009? The bear market reversed and started to turn around. You have, and you can't see it all here, but these are the different countries involved. You have 2009, you have 2009 and 20, and we're not done yet. There is more quantitative easing occurring now than I've ever seen. And will this be enough to not let the market go down? And that's what they're hoping for, and that's why you have to be careful getting too bearish. So, strong end of the week mitigated much of the early week damage as the Russell leads the higher on the week. You could see performance for the year. Are you up today? I know a lot of people are, myself included. Earnings season continues with lots of large cap technology. FANG stocks may give some clues as to the extent of the shutdown on the economy. QE continues. It seems like every day futures are down, we get new QE. COVID-19 may be slowing down in New York, but other parts of the country are still seeing increasing number of cases and deaths. Yesterday, we had our record day for deaths, as rumored of treatment efficacy whipsaw the markets. The WHO commented this weekend that having the antibody may not give protection against infection. Lots of vaccine candidates are in the clinic. But as a physician and drug developer, I will tell you, despite the best wishes of close friends of mine, it is highly unlikely that we have a vaccine this fall. A year from this fall, different story. I've never seen so much work being done from a medical perspective and so many companies involved. So maybe they can shorten the time. I still don't think we'll see something this fall. We are seeing large variation among governors balancing their economic needs and opening up versus the risk of future deaths. We have the Sweden experiment where they have isolated old people. Unfortunately, I guess at 62 I would count as old, but otherwise left their economy open to see what happened. Sacrificing potential deaths for economy, but we'll see if that happened. we may see the number of cases drop going into the summer, but look out for wave 2 in the fall. How fast the economy bounces clearly will impact your portfolio. We will continue to be whipsawed by news, whether it's COVID, employment, earnings, QE, Fed minutes, and God knows what else. Now we have to worry about the fat guy in Korea who may or may not be dead, the leader. And we don't know if his sister is going to be nicer or meaner. We should be sending Dennis Rodman there to check it out. And the market has shown surprising resilience. Despite this, I'm still protecting profits with some puts. I have committed some capital to a few new positions. And yes, I have FOMO too. Let's go on to my top-down review. Let's take a quick look in TradeStation at the major indexes. We're not going to see anything earth-shattering, unfortunately. Let's start with the E-minis. You could see the E-minis in TradeStation. Interestingly, 1, 2, 3, 4, 5. On Tuesday went into a new sell signal, of which they remain. However, they are in a weekly buy, yet a monthly sell. So what does that tell me? It tells me that very long term, these markets are in a sell signal. That on the very short term, they reverted back to a sell signal. And on the intermediate, they're in a buy signal. So they're still weak markets. Sideways weak as we talked before. Rising wedge, no matter what I called it before. High jump, not an issue. Weekly bond goes red. I don't see a very rip-roaring market there. I see one that's trying. I think the risk to the downside is significant. Probably more and faster than the risk to the upside. Similar pattern on the NASDAQ. The Russell, which had a better week, had a buy signal come in Friday. So buy signal on the daily and the weekly. And then the Dow futures, similar to the S&P and the NASDAQ. Now, what I've been using a lot of late, let me just open up this workspace. Since I don't usually keep my computer on all day trading because I have a job, but now I'm working from home like the rest of the world. So I typically have this chart up to give me just a sense of what's going on in the market. I'm going to look at the daily futures in TradeStation, and let me just make a few comments. Let's see. I want to get some more days. Hold on a second. Hello, come back. I'm just trying to put more of this market move here. There's a lot of different tools on this, but here's the E-mini. Notice a bunch of red pluses formed at the top, as did a Roy Kelly major cycle high. It pulled back here. Then you start having the green pluses as the market reversed. We have pulled up to between the 50% and the 62% on the retracement, and we've gone sideways. We were up against a couple of resistance trend lines. So this to me is a market that's getting tired and running into resistance. And to me, it's getting ready, setting up to potentially go down. Again, falling out of its rising wedge. The NASDAQ futures, the big red dot, pluses, arrows, pull back here, reversed with a person buy signal came in here. Has not broken through this trend line that I wrote yet, but it's perilously close, again, running into some resistance above it. If I look at the Dow futures, same story. Notice on each of these at the highs, you had Roy Kelly's signal fired and it signal fired again at the lows. I ignore the ones without the red line. They're minor cycles. We had a positive on the Dow, a major cycle fired this week here as well. I look at these markets. We've retraced a lot. I don't think we're out of the woods. I guess I'll just leave it at that. Let's go into HGSI. And take off my glasses. Let's go into Major Markets Plus. Let's rank this with a top-down view. Should be like 26. So top-down view is really looking at Friday's performance, a little bit of Monday through Friday, and just a little bit of 3 weeks. First thing is, if we look at one-day performance, this is good. The IBD 50 breakouts or the IBD Innovator breakouts was the leading group, up 2.7 on Friday, 1.7 on the week. The Russell 2000 up a little bit on the week, up 1.7. The big weekly mover was gold miners. Finally, they started to behave. They've been underperforming gold for quite some time. If I look at the big boys, S&P 500 was up 1.4 on Friday, down 1.3 on the week. The NASDAQ composite, which is right in front of my face, which means I'm not seeing it. Well, I know it's here. Was up 1.6 on Friday, but down a little bit on the week. So you could see the Russell was the one that was up for the week. Let's take a look at the S&P 500 here. Move this up some. And you could see with the ranking, biotech was up, NASDAQ was up, small caps leading, gold miners up there as well. Yeah, I had a number of gold miners for a while, and I couldn't understand why gold kept going up, yet the gold miners did nothing. Well, they made up for it the last couple of weeks, so I'm not complaining anymore. Daily chart on the left, weekly chart on the right. Let's put up, start with the S&P 500. Here's what I talked about before. It broke above the 50, but I see this as a rising wedge in a bear market. It's, it got above the 50 was great. Can it get above the 200 remains to be seen. It looks like the rise is stalling up. On the weekly chart, you could see kind of a doji formed on Friday, which is indecision. Where do we go from here? Broken record. I say the same thing every week. Yeah, part of me thinks we might just go up to new highs. I just really doubt it. Now, could we do some of this? Sure. When I draw a straight line, it never goes a straight line. Do I think we come down here? That's a big part of me thinks that's what that's what we're going to do. I mean, if I had to predict, I think this is more. You can't do that pattern. This is more likely than this, but we may just continue to go sideways for a while, which would be great because that would perhaps mitigate some of the risk to the downside. So I don't know what we're going to do. You certainly don't know what we're going to do. Maybe you do. I should take that back. I'm not clairvoyant, but maybe you are. I just think we're at a risky period of time here, and that's got to dictate how I play the market. If I look at the Dow Jones Industrial Average, below the 50 on the cash index, although the future, the future's below as well. Below the PSAR, going sideways. Not a whole lot differentiation here. NASDAQ looks more like the S&P above its indexes. Had a mobile breakout. Again, if this was a stock, I might be very excited. This is probably the strongest of the bunch as I look at it. And if I look at the Russell 2000, the weakest, but it had a new buy signal, had a good week this past week. I'm going to go back to the S&P for a second. I mean, I've been trading for a long time. I can tell you that this here, the 2018 rapid reversal and kind of a V bottom, is not the norm. The norm are these retests, and this is 2016. Sometimes we forget about this. This is 2015 double bottom. Here was a short-term V, but it wasn't a big pullback in 2014. Again, double bottoms. So I don't think that the odds favor a V. Right now we've had a V, and only the liars and the cheaters know what's going to happen. The rest of us will just take it a day at a time. If I look at the dollar, said it's been going sideways here. If I look at the VIX, it's come down a lot, but it's not gotten down to its baseline. Gold, if we're printing all this money worldwide, gold has got to go higher. And maybe we're in the early stages of a big bull run in gold. Gold had a bottoming tail here on a sideways week. Silver has been underperforming gold, perhaps because the industrial use below its moving averages. Gold miners, however, had a very strong week and have finally got into the game. And like I said, I've got a couple of gold miners myself. If you're an IBD type of a guy or woman, you should be happy because you come off the bottoms, but you haven't broken above the 50-day moving average. I mentioned that the IBD breakout opportunities look great. It looks a lot like the NASDAQ breaking above its moving averages. Biotech has been super duper strong, partly because of COVID. Every time somebody says they're going to start a vaccine, the world seems to mark them up, even if there's no fundamental reason. So I'm starting a vaccine company tomorrow. Not. You can see how strong that is. Next thing I like to do is go into industry groups at Warehouse View. Come over here and look at the 2-day force up, and you can see that 96 groups are to the upside, led by, of course, biotech. 2 days to the downside, only 6: aircraft and parts, integrated oil, cruise, renewable energy, entertainment, lodging. Every one of those groups are COVID-related losers. They seem to fluctuate up and down depending on the day of the week. And you'll see some that might look like COVID losers doing well, like casinos the last bit. If I look at 5-day up over a longer period of time, I got 89 to the upside, and 5-day down, I've got a few more 19. So heavily weighted towards the bulls over the short-term windows. Let's look at the top stocks in biotech. So speaking of companies that are vaccine companies, this is Innova Pharma, and this is what I call my plug pattern because it's a common pattern of news-driven, crazy stocks that start to have volume like they've never had before. Here's 142 million shares in March, where back here it was having 599, 400,000, 700,000. So you start to get this news-driven FOMO frenzies. You get a big run-up because of the news, and then it comes right back down. And sometimes these stocks will make another run, and I'll play this run. I won't play this one. Why do I call it the plug pattern? Because a few years back, a number of years, and this thing's done it several times, I had the derivation, the original plug pattern. I don't think it was 17. There we go. 14. Here's a stock that on the left-hand side has 800,000 shares a day, and it's 50 cents. 112 million on the day that it peaked out. 244 million shares. And what did it do? Give it time, give it time. It came all the way back. All right, and it did nothing for a long time. And then every once in a while it pops and it comes back. So I call this pattern the plug pattern. I do not trust this period over here. I'm a little bit more interested here. Put in a base, it's breaking out. It's a story stock. Story stocks don't always end well. I don't know anything about Mesoblast, big Bible gap up on 30 million shares. The average share volume on this is 900,000. So you know there was a story on this date, because why would you have that kind of a volume? So let's right click, more info from the web, FinViz. 83% survival in COVID patients with moderate respiratory distress with their Mesoblast cell therapy. Okay, drug approvals by proxy here. So if you believe it, if you think it's going to happen, God bless you, high risk phenomenon. And what happens if COVID goes away? Immunomedics. I've been playing this one for a little while, getting into it in the 18 range. It popped on a drug approval. This is not the same pattern. My guess is this goes higher. They got a new drug approved in breast cancer. Immunomedics. Moderna, another vaccine play, big run up going sideways. Some of these may turn out to be great, but a lot of these are just going to crash and burn, so be careful. I did have a question about Exelixis, so let's look at Exelixis here. And let's look at their news. I think they had some new data. They've always surprised me. They got a couple of good drugs, nice company. Positive treatment results of their kidney cancer drug. Yeah, they have a great drug. I think they just came out with data with immunotherapy. That popped it. They have revenue. They make money. It's an interesting company. In this era of sparse product portfolios, I could see it as a buyout candidate. Precious metal mining. This is the one I own, one of the ones I own, which used to be called American Barracks. It's now GOLD. The problem with these things is they're at their high jump level, huge run up, certainly deserves to take a rest up here and probably will, but a nice move off of its lows. The next one is Newmont Mining, almost the same pattern. I haven't looked at Nugget in a while. They just did a split, reverse split. Hard for me to get excited by this. I mean, this is a gold miner ETF, and this is a gold miner. I don't understand why they have to look so much different, or why they look so much different. There's a lot of different gold stocks up here. I like some of the ones below the index as well. Here's Kinross, a less expensive gold. Looks just like the first two. Goldfields. It's just been a group that's done very well. I hope you have some gold. This is silver, wheat, and silver in your portfolio. I also like Kirkland, liked it for a while. Just broke above the 200. This was, as you could see here, an incredibly high flyer for a long period of time. Then it did an acquisition that the market didn't like. It seems to be back. One would hope that they knew what they were doing with that acquisition, and maybe they'll prove the market wrong. But it's got great earnings growth and has been a good performer. Semiconductors, some of the strength in this market. This is NVIDIA, been a great stock for a long time. Pull back with the markets, almost back to where it started before the market sold off. It has earnings out in a month. Great earnings per share growth, greater than their multiple. No reason not to see this thing go higher. NXP Semiconductors, this is one that was supposed to have been bought out at about $100 a few years ago. The Chinese wouldn't approve. It's still languishing here. Obviously, it had a new buy signal here, a kahuna. Below the 200, below the 50. It's interesting. I'm not interested in that. I've owned AMD for quite some time. You can see it's been a good stock to buy and hold. It did have a pretty good pullback with the rest of the market. It's back at all-time highs. It has earnings this week. Be careful on stocks with earnings. Texas Instruments, it looked like they stuffed their channel and built inventories, but they had a big move on earnings as well. Their earnings are out. I have a position in Texas Instruments. Broadcom, earnings are not till June. They used to grow on mostly acquisitions. It's going sideways. Doesn't seem to have great earnings per share growth. Analog Devices, again, not great earnings per share growth, but makes money, pays a dividend, up off the bottoms, has some, to me, some resistance to get through. Now, one couple that I do find interesting, Skyworks, just broke above the 200-day moving average with a person buy signal, mobile breakout from a squeeze. That looks interesting. Cuervo, similar pattern, looks interesting. Maybe it's a different group, but Synaptics is another one that looks interesting to me. Yeah, it's other hardware. Breaking above the 50 here, out of a squeeze. Specialty Pharma. I can't believe I'm going to recommend this, but I'm going to probably look at buying some Tilray. Why am I going to buy some Tilray? Well, I can't resist bargains, but here's a stock that's been in a long-term downtrend. This stock was once a $300 stock. It's now a $6 or an $8 stock. If it clears its 50, there's no reason why I don't see it running up to its 200. You could see the group strength here in gray has improved. I've got a person buy signal, a kahuna, a mobile breakout from a squeeze, and notice how its market catcher relative strength has improved over this period of time. Amarin is a company that has a fish oil product that has great data at reducing downstream heart disease on patients who have high cholesterol and triglycerides. It's sold off because of a challenge to its patent that got upheld in an appellate court. They're not done with the courts. I think it's sold off too much. It might be interesting to buy here. I think you could still get a double out of it and still be below its real value. I still have a position in Axosome. Axosome breaking out above the 50 here. They've got a number of migraine drugs in development. Let me just make a comment about pre-approval biotech. The reason why you buy pre-approval biotech is because of this. It's because they get positive news on a trial, then they get an approval, and they run from 10 to 30 in 1 month's time. That's why you buy pre-approval biotech. Here's the issues with biotech that you need to know. You have 4 quarterly earnings periods. Usually they're not big deals because all they do is report that they've lost money and this is their cash burn, but they're expected to lose money and burn cash. You have major medical meetings that occur throughout the year. I don't even know all the dates. They have research that gets read out when at times that you have no prediction of. So you have lots of moving targets on news. And when the news is good, you get things like this gap up over here. When the news looks bad, you drop down. It's all news driven, and you have to be very careful. Internet-based services. I don't know why I ever sold my Shopify. You look back at this on hindsight. And on hindsight, an orderly pullback to the 200, broke down below a bit, went sideways, and had a breakout off the 200 to new highs. I wish it was that easy. Some of the swings on this stock during the day, look, here's one weekly move, and I was in it in this week, where it went from an open at 423 to a high of 591. It's like a 35% variation, or 41%, excuse me, in 1 week. Those are tough stocks to trade, especially when they're not straight up. But what a great mover it's been. Pinterest looks interesting over here below the 200. It's not my favorite place to buy. Uber, Expedia, I'm just seeing if Trade Desk is a stock that every time I want to write it off, it goes higher. It's broken back above its moving averages. Everything's green up here. This one looks interesting as well. Earnings are May 14th. Exploration and production. These have been horrible, but all of a sudden they're starting to move. Look at the weekly move on Chesapeake. Look at all of these here. Apache, Occidental, EQT, that looks like it's run its time. These are stocks that have been horribly beaten up, where oil is down to, you know what happened with USO. Now they're showing some life. They're bottom fishers. I've bought some. I also bought some Halliburton when it was really low as well. Be careful with them. Medical devices, a lot of, here's a stock, plug pattern, pullback. Now it's starting to run again on 10 million shares on Friday. You could see the stock's been nothing forever. If I go back here, it's got 50,000 shares, 78,000 shares, 800,000 shares, 1 million shares, 142,000 shares. And what do we have? 11,000 shares here. You got to be careful on these. They're story stocks. Buy and play at your own risk. I do like CODX. Again, a plug pattern, pull back sideways, and now breaking out. I don't mind playing this run. I don't like playing this. It almost always comes back. All right, we've looked at most of these. Let's look at some of the big earnings stocks for this week. And what do I want? I'm going to go into Thinkorswim. And let us go into the charts. Let me tell you let me go to a different chart. Well, I guess this is fine. I'm going to pull up that PowerPoint again because it's got the picture of the slides, the stocks having earnings. And let's look at a couple of them. I put it on a different monitor, but let's look at some of my favorites. So the benefit of Dr. Keith's tool. Let's look at AMD. And let's change this daily to you can see on the weekly chart that back here, it started printing off a seasonality pattern. Here is when they add on to the last date. Seasonality is strong on AMD. Let's see about 6 months daily. It's at the high of its range. I already own some strong seasonality. Let's pull up the HGSI daily chart. No real actionable moves yet. Near the top, but not at the top of its high jump. Let's pull up seasonalitytrader.com. This has been historically my favorite seasonality program. It's just that the proprietor's been taking the money and not been answering emails or support issues. It used to have a great scanner, and then the scanner pretty much, some of the fields were no longer working, and if the fields weren't working, then it wasn't worth anything to me. AMD. So AMD, what's it show me here? The green bar says it's bullish. Let's open up. Let me just check, see if there's any updates. Of course not. That would require him to actually have to care about his program. Put in data. So you can see earnings are coming up. And if we look at April 17th to June 3rd, it's up 6 out of 10 times. That's not enough seasonality for me to want to take the trade. And I'd say, let's look at the next one. The next one that looked interesting is Google. Let's just go GOGL. You can see seasonality is strong. A new buy signal at the 200. That looks interesting. Let's go into HGSI. A buy signal at the 200. That looks interesting. Let's go very quickly into seasonality trader. Let's see if Google should have enough data. Let's see. Not a super strong seasonality, 3 ups, 3 downs. So it's got good seasonality coming up, but nothing there that I think gives me a big edge. What else do I want to look at? How about Dexcom? So I said I would look at Dexcom, so DXCM. This has been a big leader in the market. Best looking chart I've seen all day. Lower left, upper right. Look at the earnings per share growth, much higher than the PE. Fundamentally, that's strong. Let's go into here. Great seasonality coming up. Let's go into seasonality trader. Not enough data, not enough years, I guess. It's got 10 years, so let's see. May 7th to June 17th, up 9 out of 10 years, 17.8% return. So it's got great earnings coming up. What this tells me is I don't need to get in yet. When's the earnings date? Let's pull this up. So this is one that seems to run after earnings. I'm going to keep that on my watch list. That might be something to play with now. CEMI, that was one I talked about before. I don't know anything about this. Wow, must be a COVID play. What a big move here. Let's look at its historic seasonality. Maybe it's not in the database here. Yep, here it is. Wow. Now we're talking. If you bought it April 13th and sold it May 26th, you were up 7 out of 10 years, average return 13%. That is brutally strong looking seasonality. Let's go into Thinkorswim. Past performances does not mean it's going to go up. But Yeah, the problem with this thing is look how much it's run. In fact, let me just drop it into TradeStation. Yes, I switch back and forth from these programs all day long when I'm doing my analysis. My problem with CMI is probably the high jumps high. High jumps at 100%. It's tough to chase this thing even with super strong earnings. If you're in it, God bless you. You got a great play. Let's go back in and see why aren't I in CEMI. Long period of consolidation. Person market catcher actually looks like it was getting less bearish over time. Person buy signal. Lots of kahunas. Mobile breakout from a squeeze. I'm sure I didn't buy it because I didn't know anything about it or it didn't show up on a scam. What a beautiful chart. God bless you if you're in it. We liked mTOR early on. All right, so mTOR looks like the market. It's halfway up. It's below its moving averages, which we don't like to see. Earnings are the 30th. Looks like the earnings are going to go sideways. That's a loosey-goosey chart. I'm not going to look at it. Even though the numbers are good here, 5 and 1, 12, or 5 and 4, not good enough for me. Pegasystem was one that looked okay. Let's just put it in here first because we're here. Nope. Let's look at Microsoft. All right, there's no way that Microsoft, here it is, it was just slow. Doesn't look like it has strong seasonality. How about Amazon? Nothing special on seasonality there. Let's go back into some of the charts here. Let's just bang a couple of these with seasonality in HGSI. So Netflix already had its earnings come out, and their earnings were okay. It didn't really sell off, but really what happened was it traded up to 460, 470, and it came back down and went sideways. Netflix is actually interesting here. It's got a bit of a flag forming. I think Netflix is going to go higher if Amazon or the others' earnings are good. Tesla, I don't know how you play this stock. It's all over the place, but you got a little bit of a base here. Earnings will come out. The last number of earnings, they've over-delivered cars. I think it's going to be hard to do that this quarter. We already looked at Google. Google looked interesting because it's sitting right below its moving averages. Visa, you know, you got to believe shopping is down and their receipts are down. It's kind of in nowhere land. A lot of the insurers are having moves. Anthem is struggling there. I don't see a big story there. What about McDonald's? Struggling. Do I want to buy airlines? No. I mean, I wish I could show you something that's going to do amazing with earnings this week. I went through some of them already. I mean, there's some good stocks here. Applied Material looks like it's getting ready to break out above 55. I'd probably wait till it broke above the red line. Home builders have been doing surprisingly good. I guess the low rates. Do you want to do some bottom fishings here on Beazer Homes? A person buy signal coming in, flat on the bottom here, less negative on the market catcher, a mobile breakout. You know, it probably goes higher. Just see if there's anything else I wanted to show you. Texas Bank shares. Similar pattern. Notice flat bottom and market catcher getting strong, a new buy signal, kahuna, mobile breakout. You're buying some things here very, very cheap. I've got a list. Let me look at my list very quickly. Apple, Adobe. Here's a small biotech breaking above the 50 court. It's got earnings per share growth greater than the PE. EVOP looked interesting. EVO payments coming out of a squeeze, pretty low in its pattern. I showed you Telray. Another stock I like is Lumentum, breaking above its moving averages with new buy signal out of a squeeze. CVM, sell side. Nice pattern there. It just had a big move. That's the problem. But a mobile breakout from a squeeze out of the base with a kahuna and a person buy signal. I showed you Synaptics. Again, another nice pattern. Breaking out above the 50-day moving average. A little bit of momentum there. I'd be very excited. If I showed you Adobe is another one I like. Again, breaking above its moving averages. Lots of things to like this week. Got to be careful of the earnings. And, I'm still, as I look at the market as a whole, I think this market's going to go lower. I hate saying that. I'd rather be a bull than a bear or an in-betweener. I think the odds favor. We have a pullback coming. I just don't know when. I'll trade the market I have, not the market I think I should have. These are a list of stocks that made my buy watch list. These tankers are doing great. Why are they doing great? Because they can charge so much per barrel of oil that they hold per month. There's a lot of tankers floating around the Gulf of Mexico, floating around with barrels of oil in it. Facebook announced some WebEx abilities this weekend. They went up, and at the same time, Zoom, which charges for the same thing, it's ZN, sorry about that. Zoom had a lousy day after Facebook made their announcement. If you look through this, many of these stocks we've already mentioned. Leidos is another one. And again, I like the pattern of breaking above the moving averages. There's no big resistance above this. It had a mobile breakout from the squeeze and person buy signals. Apple earnings this week. It's that area that I like to get interested here, right below the PSAR dot, just broke above the 50. I think those earnings will be very interesting, to put it mildly. There's Dexcon. All right, on that note, I think I'm going to say goodbye. You all have a great week. And I'll see you next week. Be careful out there. Goodbye.